moving on to grants. So if you're applying for grants, there are just things to consider around conditions that may be attached to a grant. Okay, so if you're receiving a grant, the first thing to understand is, does it have a use or return condition attached to it? Okay. When you're recording these in your accounting system, it depends on what that condition is as to where it's recorded. So if there's no use or return condition, it can be recognized as income straight away. But if there is a use or return, it's recognized as a liability, money that has to be paid back unless it is used for the purpose that it's been allocated for. So let's say, for example, you receive $10,000 to refurbish the club rooms. As that money comes in, it's recorded as a liability, and then as it is spent, it is moved from there across to revenue and then out to an expense as well. And once it's all gone, then it's removed from as a liability, and you can report back, or you need to report back to your funder as to where that money's gone. And again, this is where a system like Xero or MYOB comes into its own, because we can set these systems up to track income and expenditure for specific grants or specific projects, and then provide a report back to that funder on exactly where that money's gone. The cost of an accounting system pays for itself, in this way. And then tax and GST. Tax, no getting away from it. Well, no, very hard to get away from GST anyway. But the basics for income tax: if your organisation is registered with the Charity Services, or if you've applied for a tax exemption, you don't have to pay any tax on your income. You can apply for an exemption through Charity Services. You do not need to apply via the IRD. Okay. If you're not eligible for a full exemption, you can get a $1,000 deduction from your income, which means no tax on the first $1,000 each year. Okay. But not all income is taxable income. So membership fees or subscriptions, they're not considered income, so therefore not taxed. Depending on the conditions around a donation, a grant or a subsidy may not be subject to income tax. Raffle proceeds, amounts left in a will, like a bequest, that's not income either. You really need to have a reputable tax advisor helping you out with these things. So in full disclosure, we would be happy to do so and help you out with this. But we are a commercial organisation, and we do have to charge for the service. So moving on to GST. There's no getting away from GST as a not-for-profit. So if your revenue is over 60,000 a year, then you have to register for GST. Okay. Some types of income that will be included in a GST return would be subscriptions or grants, subsidies or sale of assets. Donations generally do not form part of your GST taxable activity. If they are given on a free, at will, no restrictions basis, there's no conditions attached to them, then they are not subject to GST. Okay, and there's a slide there that gives you a bit more. It's called the unconditional gift rule. Okay, if you make your donation voluntary and the donor does not benefit directly from the gift, then it's not subject to GST. So moving on to the new Incorporated Societies Act, this is a very hot topic. We've had a lot of inquiry around this. A lot of changes coming in this act, and there's a lot of uncertainty out there. These slides will be available after, so you can take these away and have a close look. So at the moment, a not-for-profit organisation or a society is registered under an arm of the company's office, but there are new rules coming. So you re-register your organisation to comply with the new act. Okay, it may mean changes to your organizational structure. Okay, A society must have at least 10 members and have a committee of at least 3 members. Okay. The members will be officers and they are responsible for running your organization. Okay. There's certain criteria which are laid out on the slide. It's pretty self-explanatory on there. You can't be under 16 years of age. You can't have been convicted for a crime that involves fraud or dishonesty or money laundering. And you can't be disqualified from being a director. So generally people who are undischarged bankrupts are not qualified to be a director, so they would not be able to run an organization like this either. Okay. Another new rule is you must have mechanisms to ensure that new members explicitly consent to becoming a member. And that would be fairly simple to put in place. It's a precedent document that you would have drawn up and that all your members would need to sign upon joining or rejoining your organization. Every organization now must have a constitution. Okay, so it's a document that outlines the society's purposes, what it does and how it operates. There's a lot of smaller clubs out there that don't have these. And you've got to provide a copy of that to the Incorporated Societies Register. On the Companies Office website, there is a tool that can be used to build your constitution, but it's highly recommended to seek legal advice before you file it, before you finalize it. Okay. There is a basic set of rules that your constitution must have, but there's no limit to what information you can voluntarily put into them after that. Okay. This is where if you want to have an audit done, this is where you would require this in your constitution. It's a double-edged sword. Audits, as I mentioned before, they help with funding applications a lot, but they are relatively expensive and it's hard to get auditors now too. They're all very, very busy. It's a specialized area, not an area that we practice in. We aren't authorized to do so. But I do know there's a lot of organizations looking for auditors and trying to get their accounts audited. Okay, so again, following on from the previous slide, this is what a constitution should contain in it at the very basic level. What its purpose is, how someone can become a member, and the conditions of membership. Okay, the makeup of your committees, roles, functions, powers, and procedures, and how the society will be run, how meetings will be held, how decisions are made, how people are elected into position, and procedures for resolving disputes. It can be written in either English or Māori. So moving on to reporting standards this is annual reporting. There's 4 tiers under the not-for-profit sector of reporting called Public Benefit Entity Standards. Now, the XRB, External Reporting Board, is a government-run organisation. They are responsible for setting accounting standards for all sectors in New Zealand, whether it be for-profit or not-for-profit. So under the not-for-profit, there are 4 tiers. My estimate is most people watching this today will either fall into tier 3 or tier 4. All the details are in there. Oh, sorry, jumped the gun. Your annual accounts must be filed within 6 months of your balance date. So your balance date is your financial year end. So if you have a financial year end of 31 March, they have to be filed by the 30th of September. Okay. The XRB do have templates that you can use to produce a set of accounts to the required standard. Quite a lot of work involved in putting them together. If you can afford it, my recommendation is to use an advisor like ourselves. We can do it for you as well. Okay, so a charity or an organisation is deemed small if its operating expenses are less than 50,000 in the last 2 financial years, and your assets, things current assets, so items that the organisation owns, are less than 50,000 in the last 2 financial years. You're not a registered charity and don't have donee status for tax purposes. They are held to the minimum standards under the Incorporated Societies Act. Okay. So the current financial reporting requirements is financial statements are filed with the Companies Office, Incorporated Societies sector of the Companies Office every year. At the bare minimum, they contain a statement of income and expenditure and a statement of financial position, and the disclosure notes around those. Okay. The deadline for filing is the end of the month that follows your annual general meeting. So if it's in July, then your deadline is the 31st of August. The process for the new reporting standards, the Act was passed in April 2022. The regulations were developed up until October 23. And then from that point on, everyone has 2.5 years to re-register. Okay. Once you've re-registered, then the new financial reporting standards apply, which are, as I mentioned, come out by XRB. Okay. So I've detailed tier 3 and tier 4 standards here, simply because I believe that most people watching this today will fall into this camp. If you fall into a tier 1 or tier 2, sorry, or heaven forbid a tier 1, talk to me offline and we can help you out with that as well. So tier 4 is the most basic standard. It's cash-based accounting, no accruals involved. Okay. A statement of service performance, that's basically the equivalent of a profit and loss statement or a statement of financial performance. It records what you've received and what you've spent. Okay. And then a statement of cash. So cash in and cash out and the supporting notes. Under tier 3, you can use accrual accounting under this method. So that's where money has been earned but not yet received, or money has been allocated for expenditure but not yet spent. So if a bill was paid on a bill was incurred before the end of the financial year, but not paid until after the financial year, we would still recognise it. Okay, little more detail in those reports. The statement of service performance, the statement of financial position, cash flows, and then your policies disclosed as well. Okay. The small society minimum standards, okay, is a bit less than that again. You're not required to have an audit at all. They can voluntarily choose the XRB standards if they wish to, but not required to. Okay. And that's the end of my presentation. I feel like I've rushed this quite